Hello everyone. So I'm back here again, and today I'll be discussing about Forex for beginners. And by the way, that's just a screenshot right there. That's not my actual trading desktop. But anyway, I've been blogging about my Forex analysis of the US dollar Canadian pair for quite some time now, and from some of the comments I've received, it hit me that apparently some of my audience or some of my readers may have no clue what I've been talking about, and likely those who have no idea what Forex trading is, how it's done, and all that. So I thought of creating this how to trade Forex for beginners blog post. So if you are new to Forex, so here's my guide on how to trade Forex. Okay, so let me start with the basics of trading in general. Trading, essentially, think of it as a marketplace. There are basically two players, a buyer and a seller. And in trading, you can be either one of the two. When you're the buyer, basically you buy into a position, or you go long, or also known as taking a long position, and your play is basically you're buying low then selling high, which means you're expecting the market to go up. But when you are the seller, when you take the position of a seller, that is also known as shorting or taking a short position, and your play is obviously the opposite, wherein you sell high first and then you buy low next. And this means that you're expecting the market to go down. And that's basically all there is to it. That's plainly speaking, that is trading. However, obviously trading is a lot more complicated than that. There's a lot of things to consider, like timing, identifying opportunities, identifying the trend, and then forming a strategy or a plan to trade, and also managing your emotions, and lastly, and I guess one of the most important is managing your risk. Now, in this video and in my blog post, I won't really be diving into those things, as like I said, this is more of Forex for beginners and the building blocks for the foundation for trading. So if you have any experience in trading, you'll probably find this pretty elementary. But nevertheless, yeah, this is for newbies, essentially. So now let's move on to charts. So here's an example of a chart, and the most commonly used chart type is the candlesticks, which is what I've got here on the screen. And as the name implies, it is called a candlestick because it looks like a candle. And usually candlesticks are color coded, and it could either be a green and a red, or a white and a black. And wherein green and white candles mean that the price action was positive, or it moved or climbed higher. And for a red and black candle, it means that the price action was negative, or it moved or dropped down lower. And let me show you some basics of the candlesticks. Just let me pause the video here. There you have it. So here's an explanation of a candlestick. So the green obviously is, as I said, the price action was moving up or climbed higher, and the red was price action was going down or went down lower. And then you'll see some sort of vertical sticks on top or at the bottom in some of them, and those are called shadow or wick. And the area where it's color coded, that's called the body of the candle. And obviously the topmost part of the wick is the high of that day, and the lowest, and on the bottom part is the low of the day. And obviously the candlesticks is also depending on the time frame that you're looking at. So not necessarily high of the day. If you're looking at a 30-minute candlestick, then that's basically the high of the last 30-minute duration for that candlestick. And here's the second type of a chart, which is called or called the bar chart. And bar chart is typically, it's just a line, a vertical line with like a tip, horizontal tip on the left side and on the right side. And they may also be color coded, as you can see here from my screen, or sometimes they can just basically be like black. And because you'll like the horizontal tips, the short tips on the left and right is what tells you what was the open and the closing. So a black colored bar chart would suffice, so to speak. Now let me show you the basics of a bar chart right here. And similarly with the candlestick, the top is the high of the day, the low is the bottom of the day, and then the tip, the horizontal tip on the left side is the opening price, and the one on the right is the closing price. So yeah, so that's all there is to say about bar chart. Now there's another thing to be said about candlesticks, which is the patterns they form. These candlesticks pattern basically tell a story or have a meaning, and understanding them is very useful in trading. However, there's quite a handful of them, and I don't want to really prolong this video or my blog, so I'll be writing a separate blog in the near future solely for solely about candlesticks patterns. And so now let's dive into the meat of our tutorial for our blog or video blog of how to trade Forex. So first off, you may ask, what is Forex? Forex is short for foreign exchange. Obviously, it is two currencies that are paired together and would show the equivalent value against each other. And this is why you'll see from my previous post, or hear me in my videos mentioning currency pair, is there is always two currencies involved when you're going to trade Forex. And the currencies are normally abbreviated to 3-letter form. And let me show you some examples of the common ones. So these are the common currency pairs: the US dollar, the euro, the British pound, the Indian rupee, Australian, Canadian, Singapore dollars, Swiss franc, Malaysian, Japanese yen, and the Chinese yuan. And those are the common ones. And obviously there's a whole lot more. And then, as I also mentioned, when you trade Forex, they are traded in pairs. So here are some examples of, and again, these are the common pairs that most trade with. And yeah, so now let's go into the meat of our discussion. So what will you need in order to trade Forex? Number one, basically, is a broker. You need a broker to trade or to start trading Forex. You'll have to open an account with them, and there's a lot of brokers out there in the internet. You can find them online, and you can compare them, check out their features. I will not really go into the features of what brokers offer. I'll likely write a review or do a video blog comparing some of the ones I know, and obviously the one that I use. And also, choosing a broker will also depend on your country of residence, because some brokers you can only trade at certain countries, and some aren't available, or maybe even some are not legal at other countries. So that being said, you'll have to do your research on what could be the best Forex broker from where you're coming at, or where you're from. And second thing you'll need is, which is the most important one, is money, your capital to trade with. And this is very obvious, since you'll need money in order to trade. And you may ask me, how much should you start with? And especially, obviously, since our audience are beginners, you're likely just starting out, and this will also be dependent on your broker. But from what I've seen, it's usually you can start with 1,000, whether that be 1,000 US dollars or 1,000 Canadian dollars or euro or British pound. It's usually 1,000. Some may have lower, like 500 or maybe even 100. I haven't really seen if there's a broker out there that allows you to open an account for just $100. But yeah, 1,000 is the common figure that I usually see out there. And then thirdly, the third thing you'll need is margin, and this again is also in relation to your broker. They're the ones who specifies how much margin they give you. And the good thing about Forex, and that's a good thing about Forex trading, and I like this a lot, is that the margin that the brokers allow you to trade with, and this is where leveraging comes in. Your broker would basically loan you a certain amount multiplier to your account's capital or fund. For example, some brokers would give you a 10 times margin, meaning, let's say if you put $1,000 into your account, they will let you trade up to $10,000 of position, and so that basically opens up opportunities for you. And that's one of the good things about margin, is that you're leveraging or using your loaned money, and it's pretty much very low interest rate, and some don't even charge you with interest rates, but or well, if you're only day trading, obviously, but if you're going to be holding position and utilizing a whole lot of margin, and retaining that position for days and weeks, and obviously they'll charge you for interest on those ones. And but the other thing about margin that is not so nice is that if you don't know how to manage your risks, then you'll end up likely in debt, since that is a loan from your broker. And if you, worst case scenario, lose everything, so you only, think about it, you only put in $1,000, and if you lose the whole 10,000 in, if you took a position that's worth $10,000, then you'll end up negative 9,000, and you'll have to pay back your broker with $9,000, and that's going to accrue interest as time goes by. So if you can't pay it all at once, then you're kind of screwed. So that's kind of the risk with margin, or with leveraging, if you don't know how to manage your risk. And then finally, to close this off, I'll quickly talk about trends. There's two types of trend. One is an uptrend, wherein it means the market is going higher, it's trending up, and you'll clearly see that in the bars or candlesticks, wherein it's showing higher highs, that's the HH there on the screen, and higher lows. So that's the uptrend. And then the second one is the downtrend, wherein it's trending down, and you'll see the candlesticks are forming a lower high and a lower low, and so you'll clearly see that in your chart. So yeah, there you have it. That's all for now. I'll add some more Forex trading tutorial blogs in the near future, and stay tuned for my candlesticks pattern tutorial. And now that you've hopefully learned something new from this video blog, go ahead and check out my November 29 Forex analysis of the US dollar Canadian pair. Hopefully that will give you a better understanding of what I've been talking about on that video blog. And yeah, so that's pretty much it. Thank you very much for watching and listening, and you have a wonderful day. Bye for now.